Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday's action, we saw an extreme move to the upside as we were able to render all-time highs on the NASDAQ and on the S&P 500. Unfortunately, the machines got involved, pushed the markets into a frothy area where we got an RXT sell signal on the S&P, and we are seeing some minor weakness overnight. I'll go through all these details here in a few minutes in the technical section. We're also continuing to see lots of robust activity in our database, and there's a lot to discuss tonight as we come into Wednesday. I'm looking forward to doing our live stream that we do every Wednesday. That'll be at 1:30 New York time, and we've got a lot to discuss there and to unpack as we come into these all-time new highs and building expectations going forward. But as we look back on yesterday's activity, this is something I've been talking about for a while. I thought we would see these type of metrics coming in more at the end of September, October, into November. Now as we're coming into December, we're actually starting to see a fair amount of weakness starting to emerge in the economy. This is possibly because we didn't get a stimulus deal back in October or November. We're starting to see the effects of this lack of stimulus, at least from a spending standpoint. Yesterday, we saw the manufacturing numbers come in a little worse than expected. There's another metric inside the report that has some employment implications, and that came in at 48.4, which is in contraction mode. So we're definitely seeing some slowing going on. But if we start today, we're going to have ADP coming out. We're expecting to see 380,000 new jobs. This is going to set the tone, I believe, for the rest of the week, as we'll start to see some sort of market sentiment grow out of this number. So if we come in less than that number, even though it has very little relevance to the employment numbers that'll come out on Friday, market participants often will grab this report and start to build market sentiment and dialogue around this number. We'll see how this number comes out to see what type of impact it has on the markets. But as we go through the rest of the week, as I mentioned in yesterday's video, it's going to get more intense. The news that will be released will continue to have more and more impact and importance as we move into Friday. One of the things we're starting to see, we saw Janet Yellen on the podium yesterday playing the role as the fairy godmother, and she's always been a very dovish, but she's also been very progressive in the way that she sees what the role of the financial markets and how things should be handled. So just know for a fact that if she gets in as Secretary of Treasury, there's going to be a huge impact. And maybe this is what the markets are playing into, because the markets appear to love the fairy godmother. She's already starting to grandstand on what things need to be done and everything that's going to happen. This is going to be some really interesting times as we come into first quarter of next year, and just to see how much this new administration and all of the impact that they're likely to have on everything. We know when Trump came in, there was a huge shift in just about everything that was going on. We're seeing that again. I know there's a lot of uncertainty out there yet around the election, but it's a long shot that Trump's going to be able to turn this thing back. Everybody knows that. But the realities is that you're already seeing grandstanding by one new cabinet member after another. And it's getting very interesting. And I think the biggest one I'm seeing right now that's going to impact us as investors is going to be Janet Yellen and her role as we go forward, potentially in the stimulus. And of course, we've got the elections in Georgia for the Senate, a big deal for getting a fiscal deal, because remember the old stimulus, we've already seen another try at stimulus again, and McConnell blew that up, no problem. So this is not going to be easy if the Senate stays with the Republicans, it's going to be a war zone going forward as far as getting stimulus done. We've already seen that for what, maybe 3 months, better part of 4 months now. We've seen this struggle of trying to get the stimulus done. So I think markets are getting a little bit ahead of themselves, especially already starting to play into some of the narratives of a new administration that won't even have a chance to do anything really until February. So we're a ways off from the impact of any of these events when they happen. So let's go ahead and take a look at the charts, see what they're set up for Wednesday. As I go through the WaveTech database, we're continuing to see traction, another 500 new buy signals between the two models on the daily. We've now pushed the percent bullish to the 78.57 levels. It's possibly stalling a little bit here. Even though we saw a nice positive rotation, there were about 250 sells, so the net was about 250. That's why we didn't see much of a push on the percent long. But this is still moving forward. Where the current average duration now has moved to 13 of 40, so we still have at least another 2 to 3 weeks. I've talked about this probably a week or two ago, that it looks to me that we're going to come right into somewhere around the 20th to the end of the year. We're going to see this thing get a little frothy, a little long in the tooth, and this sets up pretty good as we go through the technical section here in just a minute. As I go through the S&P 500, overnight we're seeing a little bit of weakness. We're down 0.22 on the session with down 8 handles at 36.52. We did not get an RXT sell on the futures, but we did get one on the cash, which I'll review in a minute. One of the glaring facts that are coming out of this move up is we're not seeing acceleration on PPM1. We're actually seeing it stay below its first and second derivatives, which is somewhat of a negative as far as any kind of explosion. Now, the markets were much stronger than I thought they were going to be yesterday. I did not think we'd get above the RXT level, but we did manage to print above that just briefly, both on the futures and the cash. But the PPM configuration is the most concerning from the standpoint of what's going on within the trend. And this is why I continue to expect to see markets move higher, but also trade within the grid, especially after the RTX sell. Taking a quick look at the market grid on the futures, so far we've seen a high of 36.66. R1 is 36.71, so we've just about printed R1. S1 36.49, we've printed 42, so we printed between S1 S2. I suspect we could see an S2 S3. Not really expecting to see a move down to the STX number, but if we did, that would equal the low that we had a couple sessions ago at 36.13, but there's also the 10-period moving average at 36.10. And as I mentioned, the concern here is that the PPMs are only up at 0.13, so there's not enough upward pressure to hold this. This market could become vulnerable to a penetration of the 10-period moving average and potentially move lower in this pattern, in spite of yesterday's strength and printing above that spike high that I talked about for the last couple sessions. As I go to the cash market, you'll see that we did have this RXT sell. The RXT was 36.45. The high yesterday was 36.78. We did see them sell off fairly good in the last hour of trade yesterday, but this particular configuration suggests that we're going to move sideways for 1 to 3 days, and typically what we'll see is a print toward the S2 number in the pattern. We look at the market grid for today. S2 is 36.47, S3 36.40, STX 36.33. So we're likely to see the market move basically between the 36.55 S1 into the grid, S1 down to S3. Expectation is an S2 number. We could see an R1 S2 number. The high yesterday, as I mentioned, was the 3678.45. So that is a new high. I also discussed in last night's video that over the last 4 Mondays, we've had this vaccine news come out, and we finally got above that number, which was 3645 that printed back on November 9th. So yesterday's high satisfied that, but there's not a lot of floor term we used to talk about, not a lot of big in the market, not a lot of momentum, as the PPM1 is at 0.10. And with us coming in lower, this number is going to show a weaker profile on the cash when we come into tomorrow. So I'll cover this in the live stream tomorrow. This will be interesting. The PPM2 is actually accelerating on cash, which tells us that regardless of what happens here, we're going to stay at a high level consolidation at best. With the RXT sell, we should see at least 1 to 3 days as the typical pattern, and we move in toward the bottom end of the grid. So depending on how we trade today, we could see that grid slope down on Thursday, maybe coming into Friday. We'll have to watch the setup, and I'll be covering that in the videos as we go forward. The next market I'll cover is the NASDAQ. We're seeing it down 14 handles overnight. We look at the grid for today. S1 is 12,402. We've actually printed 12,405, so we've printed an S1 number. R1 is 12,502, high 12,473 overnight, so we could see a little bit of a move up, but just like in the S&P, I'm looking for most likely an S2 number to print today. As I also discussed in last night's video, the general profile of the PPMs on the NASDAQ have a stronger profile, so there's less downward risk on the NASDAQ, and it's going to continue to claw back at that spread that I've been talking about for multiple months. And I'll also cover this in the live stream tomorrow. So if you can't watch it, there's a replay. We'll make sure that we mark everything so you can find this stuff. But this is, the general pattern is a bit stronger in the NASDAQ versus the S&P. As we look at the daily gold, we finally saw a nice reversal. I talked about that I thought we would hold this support level that we printed the other day at the 66 level was the magic number, 1766 to 1761. We did see a reversal yesterday. The U.S. dollar has been collapsing over the last several days. As I mentioned before, we're going from America first to America last, where we're seeing the globalization come back into play. So you're seeing just a massive sell-off. For many months, I've been talking about that the dollar was setting up a major bottom. Well, that narrative's changing very quickly, and I will cover the dollar also in the live stream. So you definitely want to watch the replayers show up at the live stream tomorrow, because there's just way too much to do in this nightly video tonight. But as we look at the pattern setting up, we also saw that move up, and we moved toward the Fibonacci retracement number, 0.382 from the new lows that we set in this pattern is now at 1843. But we also have the 10-period moving average, and the PPM1 is at a minus 0.34. The 10-period is 1823. We've seen a high so far tonight at 1819.40. The last is 1817. If we traded above that, there's still more resistance overhead here around 1833, and then at that Fibonacci number 1843. So this could start to set up actually a bigger bottom here, and possibly this weakness that I mentioned in the dollar will start to play in. We'll see gold finally find the support levels that I've been looking for a while, and it's very possible we're going to rebound back above that 200-day moving average. We just spent about a week under it. Just taking a quick look at the weekly chart, what I'm seeing here, and I mentioned in last night's video, is a move back toward the 40-week moving average, 1838. As I mentioned, that number is around the 1843 is the Fibonacci retracement number, 0.236. And I don't think we're going to get much above that number. We could, looking at the grid on a weekly, 1833 is R2, which is a perfect match for this projection. The next number above that is 1857. That's certainly a possibility in this pattern this week. It all depends on how weak the Dow gets, I believe, as we go forward. And this is all tied together, folks, as far as what's going on here. Treasury saw a big surge. It actually got an RXT sell. So everything's likely to be stabilizing. And I'm just going to cover all this stuff in detail in the live stream tomorrow. So this will complete the video for tonight. Make sure you set your timers and show up at 1:30 New York time for the live stream tomorrow. And we'll spend 2.5 hours together just talking markets, going through everything that we need to discuss. There's just a lot going on right now. Thanks for watching.